Professor Nima Vafai, thank you so much for joining me. You are a professor of finance you are working from Texas, and you are PhD from finance, of course, and you are a native of Iran, right? So that's your short introduction. You are publishing your papers in these journals and whatnot. So let's talk about financing, general economy, personal finance, whatever that comes to our mind. Okay. So first of all, my question would be, what is the view we have about current state of economics, especially inflation? That is the hot topic per se, right? So what do you think is happening in the economy?
Yes. First of all, thank you for having me here. As you said, I'm an assistant professor at University of Texas Permian Basin, and yeah, happy to be here with you. So about your question, there are, as you know, there are a lot of ideas out, like separated into like the economy is going to go down, and the other people, like the economists, are thinking about maybe like the soft landing, and we are not going to get into a recession and things like that. So far, like the data that we got from the economy shows that we are not far away from the recession. We haven't had a soft landing in the history, but it looks like we are getting there. We are going to have a soft landing based on the data that we have. But we should also keep in mind that some unexpected things might happen that are basically um, um, uh, are unexpected, and like though like people like the analysts, economists are taking into account all the things they have studied so far, like all the things that they are aware of and they know of that they should consider. They already control for those, include those, but they're like historically we can see that like there are always something that like nobody was paying attention to, and that can ruin the whole thing, like the wars around the world, like some uncalculated things about politics, about different things that might be play as the role of that black swan. So that's going to be a problem. Sorry, my laptop was about to die, and I didn't notice that, so I just put it on charge. So yeah, that is basically. If you ask me which side I'm going to take, I am not this much optimistic about the market as the market is, as the Wall Street is actually um, uh, going to the moon. So I would say I think the market, the Wall Street in particular, is very optimistic about the economy, and I'm not that much optimistic. So I'm expecting that there should be some correction to the market. When that's going to happen, I'm not sure. This year, next year, we have the presidential election. That is something unique in the history of United States that we haven't had. This sort of actually this setting actually for the presidents. So those are the things that, I mean, nobody can calculate, nobody can forecast. There is no modeling for that yet. So I would say, yeah, basically, I'm not too optimistic, and I think the Wall Street is too optimistic about the market. So yeah.
Yes, I agree that you are on this little bit pessimistic about it. But what would you say about, let's say, there are a couple of stocks that are going through the roof, right? Mainly because of the AI boom. You can guess that the name I'm talking about is Nvidia, and what is happening to tech stocks particularly. There are a couple of companies that are driving this big valuation ride, right? So what do you think? What they are right? They are wrong? What is going on? Because macroeconomy, as you said, that we are not in such a sweet spot that Wall Street thinks, but still there is a valuation boom for this particular AI company. What do you think about that? It is contradictory. That's why I'm asking you.
Right. So I think, yeah, so AI is something uh, that we have never experienced, right? So we cannot have a, let's say, market model for, or any sort of model to model the AI and see what AI can brings to the markets in the future and in the whole to the whole economy. The thing is that it looks like that the AI is increasing the efficiency, and this is already perceived by the market, perceived by the Wall Street, and but how far it can, and what is the stage that we are going to reach with AI? Super optimistically, if we look at this, nobody can predict, right? But like the valuations is coming from basically theoretically, it comes from like the expected cash flows, projected cash flows discounted by the rates. That's going to be the value of any stocks, including Nvidia, right? That is the basically theoretical framework, the classical theoretical framework for valuation. But the main thing here is the growth rate. It looks like the Nvidia is like the growth rate expected for Nvidia is really high, and I was doubting that. However, after the recent announcement they had, it looks like they meet the expectations. So I was wrong. So I was thinking, hey, they're like the expectation was too high, and after their earnings announcement, they meet all the expectations. They were even slightly above the expectations. So if they can keep up this, that is basically, I would say, it depends on the nature of AI and how fast it can grow, and what level it can reach. Like what is the end of the AI? You can't imagine anything for the end of the AI. How far we can go with AIs? Like I'm afraid, like if AI grows in this fast speed, all our jobs are going to vanish because there would be no need for a professor. There would be no need for an actor or actress. You can ask AI, hey, make a movie, like come up with the scenario. I just want to entertain the people. And these are and you can just train the AI. So what is that end of the AI? Because I don't see any end for that. I don't see any ceiling for the growth of the AI. But there are many other classical factors playing in the market. But the prediction is really difficult. Um, like you asked me back to your question, I was expecting that after the earnings announcement, Nvidia's stock is going to go down, but it met the expectations and everything was good. But to me, it was overreaction to the price because it was slightly above the expectations, but the reaction to the price was really high. The price went up all the way to, I think, $1,000 per share, like slightly lower than that 900, 50, 900 something. So yeah, I mean, as of my knowledge, I do not have any classical model to say anything about what AI. Many people are saying it's similar, like the history is going to repeat it, like it's going to be the um, dot-com bubble, so that's going to be repeated. But I think the nature of AI is different from dot-com. So I think it's not something I don't want to be too optimistic. I don't want to be pessimistic as well, but I don't see too much overreaction to the AI. So yeah, it might be even grow further than this, because the measures of performance and efficiency are increased after a while and improved. So yeah, uh, basically I do not have any answer to your question.
No. I think you have answered at least part of my question. But since we are talking about Nvidia, right? So an interesting thing happened because of the boom in stock price of this particular company. The poster child of EV, the Tesla and everything. If you see, since the Nvidia is taking the market by this huge optimism, the Tesla is losing its valuation constantly, at least in terms of share price, right? So there is, I think there is a capital reallocation is happening from this one thing to another. First of all, EV, and now it is going to AI. Do you think that is happening, or there is something else that is happening with EV market? That's why the stock price of this particular company, Tesla, is going down.
Yeah. EV market, I think it is. I don't see much relation between the Nvidia and the EV market, particularly Tesla. I think that we heard a couple of bad news in last month and in last couple of weeks about EV and in particular about Tesla, and mainly those are the things running um, 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 uh, the craze and devaluation of the stock prices for Tesla. And it looks like the market was too optimistic about the EV. So eventually, maybe the EVs are going to get replaced by all the traditional cars. That's maybe like um, if we want to follow the history, right? So if we want to get back to the history and say, hey, the history is going to get repeated, the new technology is going to replace the old technology, and EVs looks like way more convenient. But it looks like that the speed that the market was expecting was higher than the reality. So now this is something the market is correcting their expectations about the EVs. But I don't see much connection, or I haven't done any empirical work, but I don't see like significant from my experience and my knowledge any significant relation between the Nvidia stock price and Tesla stock price. So I'm not seeing that the capital is moving from EV to Nvidia, and that is causing the increase here and decrease the other side. But yeah, back to your question, I think the EV is the speed that was expected by the market was way higher than the reality. And now the market is realized, and we had a couple of bad news. So no doubt we are going to see some market corrections.
Oh, that's good to know. So let's think about, let's say if I have $1,000 right now to invest into market right now. First question is, should I invest into market, stock market, or should I just put into money market and on, let's say, 5% yield, right? That's one question. And if you ask me to, say, invest into stock market, where do you think I should invest? If at all, I should invest into stock market at this moment.
Right. Very good question. And pretty much this is the question I have been asked recently. And since I started my PhD in finance, everybody was asking me, hey, is it good to go to the market? I think there are, if there is nobody who can time the market, I can say there are few who can time the market, who have the experience or like knowledge or wisdom, or I don't know, like some models that we don't have to time the market. So it is really difficult to time the market, and you should always think of the market as a long-term investment. Having said that, there are other concerns as well. So if you have $1,000 and you want to invest, the main thing that a financial advisor is going to tell you is a diversification. So you want to avoid the unsystematic risk. So you don't want to put all your $1,000 in Tesla stock, and then in a month or 2 months you will see you lost half of your money. So you should do the diversification. And because of the situation right now the market has, and everybody is uncertain about the future, and we have the presidential election, there are a lot of systematic risk imposed to the investment and to the market. And those are the things that nobody can predict. So um, can you find somebody tell us what's going to be the next president of the United States? And if you say this guy, what's going to happen afterwards? So once he get into the office, then what's going to happen, right? Or the current president we have is going to stay in the office. What's going to be the next, right? The concerns about his memory and things like that. What's going to happen? So those are the systematic risks imposed to the market and unavoidable, and nobody can do anything about it, even the diversification. But one thing that we can do with the diversification is a balance between money market and stock market. So I would say, just based on the diversification, I would go at least 30% of my money. I would put 30% of my money in the money market, because now the money market interest rates are really interesting, like very, very high compared to the historical rates. So you can just keep your money in a brokerage account, let's say with Robinhood, and they're going to give you 5%, which never happened in the past. So so I would say at least I'm going to keep $300 of that $1,000 in the money market, and then the rest is going to go to different ETFs, because ETFs are already diversified. They're looking into the whole market, and historically they are overperforming the other stocks by 20 basis points. So that's what I would do. I would put $300 there, and then the rest of $700 in the stock market. But when I'm going to do that, personally, which is wrong, I said we shouldn't time the market, but the market right now is crazy. So I would wait until I see some corrections. I would see the market is getting back to, I would say, rationally, because like since October last year, the market increased by more than 30%, which is crazy, right? So that's a decade. That could be actually a decade interest. Back to your question, I would keep my whole money in a broker's account, get at least that 5%. $300 goes to the money market, and the $700 goes to the ETFs, different ETFs.
Okay. So you are playing safe right now because of this market situation. So if I have to, again, I think that is a great suggestion to invest into ETF and whatnot. So what ETF should I choose? Let's say there are multiple, right? For example, there are ETFs that track S&P 500, and there are some ETFs that track tech stocks only, NASDAQ particularly, right? So again, there is a risk reward choice, right? Because right now NASDAQ is going through the roof, and S&P is trailing a little bit, but it is still going up. So what do you think somebody, let's say with that $700, what would be the division in this right moment would be of that $700? What would be the division?
Yeah, I remember when I was talking with my advisor and mentor about like my friends asking me about what to invest, and he said, "So what is your idea?" So I was trying to play smart and ask him, "What should I pick? What should I invest?" Because you have more experience, you have more knowledge, you are a professor. I'm just starting my career. And he said that SPY, just anybody asks you, just ask him to go for SPY. So SPY is tracking S&P 500, but then the tech stocks are going to sort of left out, and the market is really hot for the tech stocks. So I would say right now, if you ask me, I would say just pick different ETFs that are tracking S&P 500 as well as NASDAQ. So like triple Q. So that is following the NASDAQ. So having a portfolio of those is going to be so not only the S&P 500 but also the NASDAQ. You will have a portfolio of those stocks, and in particular, if you are into picking some particular stocks, not only ETFs, like I would say, Magnificent Sevens are running the market. So picking those 7 stock are going to be also interesting, and that's what I would do.
That's a great suggestion. So from that, I would like to move to another risk factor for the market, that is Federal Reserve, right? So at the beginning of this inflation cycle, Fed was saying that inflation is transitory, and then it went out of hand, and they woke up and then it's like, oh no, this is serious matter, and they are still holding the rate high, right? Do you think is there any rate cut this year? If yes, how many do you expect that? How many percentage points of rate cut do you expect this year, if at all there are any?
Right. I'm just saying my thoughts. I think there is no reason for rate cuts this year unless something terrible happens, because the inflation is not under control yet. It's not transitory. We will see that in the markets. We'll see that wherever you go, you see that the prices has changed. And this is something that I think if we see any rate cuts this year, it's mostly ran by some political forces. So um, um, from economics perspective, I don't see any reason for the rate cuts coming this year. The market is doing really good. The GDP is okay. And the economy, like the unemployment is not that much high. So like classically, the unemployment and inflations are going in the opposite way. So the unemployment goes up, the inflation actually goes down, right? So here the unemployment is not that terrible, and though the Fed is keeping the rates high for a long time, still I don't see any reason. And I think if there is any rate cuts coming in this year, that's gonna actually get the inflation completely out of the control.
Yes, I think that's why the Fed is waiting for more signs to take the foot off the pedal, right? Because they don't want to repeat the 1970s cycle. And I think that's why they are waiting on this. So since we are talking about inflation and everything, right? So another point that comes to my mind is, this is, as you mentioned, this is a election year. Do you think that will have certain impact on this rate cut? Because right now the prices are through roof. The inflation is very sticky this time, at least. So do you think there is a connection between the presidential election and rate cuts?
Yeah. Actually, there are a couple of papers out about the relation between the president's party and the market performance, including the Scene stock paper from one of my actually colleagues in at the UTA, University of Texas Arlington. So they were like trying to connect the political party of the president to the market performance. At least I'm not aware of anything connecting that to the president, like connecting the presidential party to the inflation. But because of the a very specific situation that we have these days and this year, that might be something uh, connected this year. So the inflation and the president, because we can read on news in like different areas that how the Wall Street Journal is valuing the next president. So if the like taking the in other words taking the next president into the valuation of the markets. So it looks like the markets sort of made its decision about the next president. I'm not going to say what's the decision the market made, but it looks like to me that the market made the decision. So any good news about the president that the market think is going to be the next president is going to sort of increasing the market. It's treated as a good news to the market, and bad news about the president that the market doesn't like to be in place is treated as good news to the market. So bad news about the bad president is basically treated as good news. So what's going to happen is like we will have a lot of political uncertainty, and those are going to affect the whole market uncertainty. So that's going to, I would say, bring up the uncertainty and the VIX index and the volatility in the market. So those things are like I'm expecting during once we get closer and closer to the election and the things get more serious and the things doesn't go in a way that the market was expecting, then we will see a lot of fluctuations in the market. But at the same time, we have AI being the main force in the market. And that's something that we should see how that's going to face the political issues. But there are a lot of things like playing right now. And people are like in the Wall Street are saying like there would be no investment strategy because AI is going to take the strategy for you. Why should you ask any financial analyst to do that? So I'm not that much optimistic. But I think back to your question, I would say, I think the uncertainty is going to be really high in the next couple of weeks and a couple of months. And that's going to make the market really volatile. So we will see, I would say, we already see a lot of overvaluations. So we might see a huge drop in the market or a big surge, but there will be sooner or later there will be a correction coming for the market.
Thank you. So when you were answering this question, you touched upon 2 points. I would like to, based on your answer, I would like to jump to these 2 questions. First, you mentioned Robinhood in previous answers. So what do you think about this boom in option trading, particularly retail investor? They are jumping into this option craze, and they are just holding 0 days to expire, kind of basically gambling with their capital. That's first question. What is your view about that? And second question is, you talked about AI and investing, right? So AI is basically machine is competing with money managers to manage your investments. So do you think that is going to affect investment in any sense for retail investors or institutional investors?
So I think that's a really good question. And I just share my thoughts with you. And I think it's going to definitely affect the future of the investments from both perspectives, the institutional investment as well as the retail investors. So the reason, and I think it's going to be more powerful because institutional investors are going to have more powerful tools. So if we have, let's say, if we have access to different levels of AI, like the premium level or just the free subscription for AI, so institutionals have the resources to get the highest level of AI. So they can just manage the whole investment with the future AI. For retail investors, depending on what AI they have access to, they can manage their investment. And I think the future of the investment is going to be AI investors. So because AI is made to be more powerful in doing the analysis and everything about, like, do all the calculations in the market. So that's going to be something that the human is not capable of doing that, uh, regardless of how much experience you have, how much uh, data you can memorize, how much number you can keep in your mind. AI is going to beat you. This is something I think the future of the market is going to be AI. And eventually, one of the jobs there would be no need for it is going to be a financial analyst. Um, um, but I mean, when that's going to happen, maybe it's going to be in 50 years. We don't know that. But that's certain. That's something, because the human being doesn't have those capabilities that the computers and AI has. And yet another question. Sorry, I forgot that one.
So the question was about Robinhood and the option trading craze.
Right, right. I think that is mainly the fear of, like, it's called in the market, fear of missing out. So everybody is like feeling like they're gonna miss out. So the market got crazy. It's very bullish. They want to get in. They don't want to be left out. So that is something happening recently. And I think it's the main reason is before this market surge, everybody was expecting a recession. So there was a lot of the market was oversold and nobody wanted to touch, because we had a huge surge before that after the pandemic. The market reached to new records, and then eventually it dropped. So everybody was like, okay, there is a recession coming. The economy is not increasing the interest rates, so those are gonna inflation and everything. So, but now, because we are, like, the market is expecting a soft landing, and they have enough reasons for to expect a soft landing. I think they don't have any other reason to be worried about the future. So, and like, all the valuations are coming from the future. So the market is expecting some growth, some future cash flows for, like, different firms, and they have no reason to be pessimistic about the future of the economy. Everything is pointing to a soft landing, and market loves that, and because of that, there is an overreaction um, um, to the investment, and like you said, people are gambling with their monies. So in the end, we might see a lot of people who are super happy, or, like, they might cry after seeing a market goes in the opposite direction. Um, yeah, so I think nobody is able to predict what's going to happen in the future, but it looks like um, everybody is very, like, at least the average of the market is very optimistic about the future of the economy.
I see. I see. So since you are an immigrant, I'm an immigrant. So immigrants, usually when we see our paycheck and we see our taxes, right? It hurts us very deeply, the amount of taxes and everything. So let's say I'm investing into stock market or some adventures, right? And then how what are the ways to reduce the taxation on personal level? Do you think there are any ways to reduce the taxation for us, like retail investors? Or so Just any thoughts?
I'm assuming you are talking about legal ways, right?
Yes, of course. Yes.
I was just kidding. So yeah, I think yeah. So obviously, what you are already saying, like we're looking at paychecks, right? So you can't do anything about the tax on your paychecks. But basically, um, um, getting some having some strategies about your investment and how much of your money is going to your retirement saving is going not dramatically, but it's going to affect your taxes and like the overall taxes that you are getting exposed to. So you have the Roth account, you have the 401k or 403b for academicians. So that those are the ones that you can play a little bit with, but the ways that in general you can avoid over taxations is like looking at your investment as a long term. So do not get into the fear of, hey, the market is going down or going up, so I have to buy, I have to sell now. Just stay for as long as you can in the market in general, to avoid dramatic taxations, to avoid getting those capital gains realized. And then next time you want to get into the market, you have to get into the market with higher prices, and nobody is going to return your taxes. So, and then you're going to lose money. So that is what would be my strategy, and I think based on the tax brackets, that's going to be another thing that we have to take into account. So if your tax bracket is really high, maybe some tax-free investments like tax-free bonds and things like that are going to be of your interest. And if you are in a low tax bracket, like most of the academicians, then obviously you don't have to be worried about that. You can go for regular corporate taxes or any sort of money market security.
Yeah, I agree. It means they say death in and taxes are the only things that are permanent. Everything is temporary.
Yeah.
So, apart from finance and economics, I would like to come to your personal story. I think your personal story is uh, typical American immigrant story. That means you came from a third world country, you came here, you got your education, and you are an academician now, right? So tell me more about that story. So you're from Iran. How was the upbringing? Can you tell me about yourself?
Sure. So, yeah, as you said, it's like a very similar story to all other immigrants. I actually came to US to just get another master degree, and I wanted to get back because it was sort of like in a competitive market at that time. I was working, and it was very competitive, and it was like valued to get a degree from West. So I came to just get another master and get back, and then the things were like got really unstable back home. And I remember my father actually passed away 3 years ago, but he told me just you can always get back, but like, why don't you just, if you like, get your PhD, because you're still young, you can get your PhD if you like that. So then after that, you can think about getting back and having your life over. So I got my PhD, and the things got worse and worse back home. And and I got much used to the culture here and the life here and everything here. So then it got eventually difficult for me to get back and start my life from scratch, uh, from back home. So I decided to stay, and obviously, as you know, it has a lot of challenges. But the beauty of the US is like it is built on immigration. So nobody is, um, I mean, only very few Native Americans are like basically used to live in these lands from, I don't know, thousands of years ago. But the majority are immigrants from Europe, from Asia, from different parts of the world. So that's the beauty. So you see a lot of diversity here. And a very good thing that you see also in many of the institutions, including my institution, is everybody is looking for diversity. So they don't mind having an immigrant. So immigrants maybe in back home even, which is unfortunate, is not a good thing. It's like you are not treated as other citizens, right? But here, because of one of the reasons actually is diversity, and the main reason I think is because the whole country is built on the immigration. Is so because of diversity, being an immigrant is not necessarily a bad thing. Sometimes it works in favor of you because the majority, let's say in one department, is just white Americans, and they want to get some diversity, right? So that's going to be good for you, right? So you are in minority, so you have higher chances compared to the same people with this same person with the same qualifications. So yeah, but it does have a lot of challenges, and I'm sure that you're aware of all of those. In particular, for me, like I know Indians speak English back home too, but for Iranians, we just speak Farsi. Like all our studies, all our books, even the numbers were in Farsi. So even at the college, like at the university, everything was Farsi. So those were like big challenges for me and for the first couple of years. But after that, I mean, raising the family is obviously is going to be a concern because the culture is different from the culture that you raised in, and to blend all of those and get something that's going to work out for you and for your family is a big challenge. So for me, I'm sort of past the challenges I was facing in the beginning as a student, as a PhD, as a master's student, and now I'm at the stage of new challenges for my family and for my kid. So what's going to be the future for my kid? How I can keep get her introduced to the culture that we have back home and say, hey, this is our history. But eventually, for the whole Americans who were immigrants, who their ancestors or themselves were immigrant at some point in the time, that was the challenge. So I think that's something that I have to overcome, and I will overcome regardless of how much effort I'm gonna. So as the time passes, I can see everything should be resolved. Hopefully, in a good.
Means it is always the balance, right? At one point you're trying to like assimilate into local population, at the same time you're trying to preserve your roots, right? And that's like big challenge, and that's where act of balance is enforced. When I was means when I met you first, at that point you also told me another story about your immigration, that in Iran, there is no US embassy. And you have to go to Armenia and neighborhood countries to get the visa. And mostly on first attempt, you get rejected. You will not get visa, right? So do you have any story about your visa interview or visa application when you first came to US?
Yes. So, yeah, obviously my visa application got rejected for 2 times. First time I went to Uzbekistan because I was working for a company. We were exporting food products to different countries around. So like nobody was going to, like no Iranian were used to go to Uzbekistan embassy. But I went there and then my visa got rejected immediately. And then I went to Dubai, and the same thing happened to me. And the main reason was, hey, you already have a master degree, you have an MBA, and we don't see any valid reason for you to go to get another master. And I was like, no, the reason is like you're not familiar with the like the job market here. So this is something recognized by the job market here and things like that. And then eventually I got my visa after 3 try. So, but the another story I can share with you is like my mom and my sister, that they visited us recently. So again, we don't have any embassy there after the Islamic Revolution. And so they went to Oman to get their visa. And the visa was approved right away. However, uh, so they turned in their passports and they stayed there for almost a month. So they were trapped in Oman. So it was like 4 weeks. They were trapped in Oman because they didn't have a passport to get back, and they didn't have visa either. So it wasn't rejected; it was approved. But the U.S. embassy was not returning and issuing their visas. So they were like, "Hey, what should we do?" And like, imagine like they didn't have reservations at the hotels. They didn't have passport to go to another hotel. So it was a very big challenge for us. I was reserving the hotels from here. I was talking with the managers, everybody, like explaining the situation. So even though I'm like thousands of miles away from my home country, still the politics of there and the politicians are actually affecting our lives. So that is pretty much, yeah. It was very difficult for them to. I mean, and they are old. Like they were not supposed to stay that much long, being under that stress. So I was expecting, hey, their visa is going to get rejected or accepted right away. So no worries, accepted. They come over here, visit me, rejected. Then no worries, I'm gonna get back, visit them, or they're gonna try maybe later another year. But yeah, so yeah, still it's very challenging. And I hear like uh, recently the students from Iran, they have hard times getting their visa. Though I know most of them has nothing to do with politics, with any bad things happening around uh, countries like my country. They just want to have a better life. They want to have a stable life, and yeah, but they have they have really hard times getting their visas.
I agree. I agree. Means that's shocking story of your parents, right? Your mom and your sister. So regarding this, your visa. So Uzbekistan first attempt failed. Second attempt in Dubai that failed. So where did you apply for the third time?
Dubai again, Dubai.
Okay. So they said, okay, you can go now. They
Yeah.
they got tired. Yeah, but yeah, here you are with all these challenges. Which these are very we think that it is very easy to get into one country, but these can be huge challenges with such a background, right? But you have overcome those challenges. You finish your PhD, you got your career started, and yeah, you have family now here. I hope everything is well and it goes on in a positive direction only. Thank you so much, Dr. Nima Vafai. Thank you so much for sharing your story, your personal story, as well as your thoughts on economy.
Thank you for having me and interviewing me here.